Hello, I'm John Key, Prime Minister of New Zealand, and I'm watching Country 99 TV. Enjoy.
Hello, I'm Glenys Christian for Country 99 TV. Welcome to the third in our exclusive series of special reports on trading among farmers, TAF. This is the final say before Fonterra farmers vote on June 25th. So far you've heard from both sides of this passionate debate that will shape Fonterra's future like never before. In the first program, you heard from Fonterra's top guns like Sir Henry van der Heyden on why TAF is the way to go.
TAF in its very simple form is all about removing redemption risk from the cooperative. And this is capital that washes in and out of our balance sheet at the end of every financial year. So that delivers us permanent capital so we can carry on driving a strategy to add value for our farmers. And secondly, it gives our farmers flexibility. On
the second program, you heard from farmers like Leonie Guiney, bitterly opposed to TAF.
My concern is with the entire concept of TAF, that the concept of putting a proposal on the table that shifts drivers within a cooperative. It simply will not retain a cooperative down the line. It will not retain cooperative thinking amongst farmers. It will change the thinking of farmers, and the farmers at the end of the day will demutualise their own co-op.
Now we bring together supporters, opponents and independent commentators as we seek their views. Joining me, Fonterra Chief Executive Teo Spearings, business commentator Fran O'Sullivan, Labour's agricultural spokesman Damien O'Connor, and Federated Farmers Dairy Vice Chairman Andrew Hoggard. Teo, if the vote's successful, what will Fonterra be able to do that it can't at the moment?
Glenys, of course happy to be here, but I'm in for the last 8 months and I try to look at this from a little bit bigger perspective. And what I see is that the formation of Fonterra 10 years ago under the leadership of the Labour Party at that time was it was a difficult process, but it was a great platform. That platform came with some difficulties with DIRA and free exit and entry based on fair value share. I think Fonterra in the next 10 years really worked on 3 key building blocks, being an independent milk price, which is linked to GDT. We are defining the level in the world market, and I think that's very good for New Zealand, so milk price and GDT. In the meantime, we have delivered our strategy, that's the value proposition, and now we are talking about the capital base. So it's basically milk market money. That's the 3 key building blocks for me. And if we get the money part sorted out and the capital base is solid, the strategy can be delivered. And the way I presented the strategy is really, it's about a cash pillar, that's what I call the must do. It's a growth pillar, what we can do, and it's new business, and that's what we want to do. If the capital base is not solid, then like in any household, the want to do activities, which are determining the value creation for our farmers long term, will disappear first. In our case, it's India, that's advanced nutrition propositions where we say, hey, we don't have that money right now. Second, what could happen is that in our key areas for growth, China, Latin America, ASEAN, Middle East, North Africa, we might have to step down the pace of execution of our strategy, and that means that milk will flow back onto GDT and it can affect our milk price. So I think, in a nutshell, on your question, if trading amongst farmers is there and we have a solid capital base, me and my team, we have worked hard, but we can execute the strategy the way we have presented it.
So Damien, you're anti-TAF. What's wrong with something that Fonterra says will grow its business?
Well, I think we all want Fonterra to grow its business, and I think it's been a very successful company. Considering the global financial crisis, I think it's done very well. And it's done so at a time it's been distracted by TAF, but it has had effectively a nominal value share. My concern is that the focus will shift to one of share value again, as both the investors in the fund and farmers as well look at the changing share value, and I think that will distract them from what they have been doing very successfully, is getting on with a nominal value share and building on the strategy. the two directives and that now Fonterra board will have to, under TAF, consider, and that is the one of the share price and dividend flows and that of the milk price. And that's a division that is a risky one.
Are you more concerned about the speed with which the legislation is going through Parliament and the fact that farmers perhaps haven't been able to study the fine detail as much as they would like, or the actual proposition of TAF?
Well, both. I've been concerned about the concept, but the fact that we got the detail of this at a very late stage, the select committee process has been truncated. This is the most important company and industry in this country, and it is really important that we get this right. And I've been concerned that the select committee, as good as and as hard as we try, we haven't been able to get a handle on some of the details. The advisors to the committee were experts in competition, not experts in cooperatives. And so I think most of us on the committee have been forced to sign off on a bill that we're a bit uncertain about.
Fran, what are the markets saying?
Well, I guess with the markets, Glenys, this has taken a long time, so there's been a bit of uncertainty build up, and I guess as farmers, some are concerned about the transparency of the fund structure. There's also been some concern on the market side as well, and so it's going to be quite important that, assuming the TAF does get voted into place, that operates in a fairly transparent fashion and that people get used to it. But they do see it as an opportunity to provide liquidity to a market that's going to need it, and an opportunity to have an exposure to an industry which, let's face it, is seen as our national champion, and also in an environment where most of our trade deals are skewed to dairy's advancement. So people want to have an exposure to this.
Right, Andrew, there's a range of views within Federated Farmers. How does that mirror what you believe is happening out there amongst Fonterra shareholders generally?
I think it's pretty similar to what's happening, what's happening internally amongst Federated Farmers is to what's happening in the wider dairy scene. We've got views on all sides, a lot of views in the middle with, primarily there's a lot of people in the middle that are sort of just uncertain as to what all these terms mean. Going back a few months, there was a fair degree of perhaps confusion as to when talking about managers or this fund or that fund or this trust or this trustee, who's meant. And hopefully all the information that's come out recently will have cleared some of that up, hopefully.
Now let's hear from a farmer in the field.
I don't want to see any influence from outside investors, but I think there's enough safeguards in place to stop that happening. And I think you'd be a pretty brave investor to come in thinking that you were going to get some control through the units, given the safeguards that are there. I imagine it's going to be passive investors like pension funds or the superannuation fund that will sit there for the long haul, rather than trying to actively engage in management.
Teo, what do you say to that farmer? That they seem to be overall quite happy with the idea of TAF, but a few concerns about some of the detail.
Yeah, I think the first concern he is raising about influence is, and I see it exactly the same, by the way, as how he explains it. People who really want to have influence in a company, they want to have the voting rights, right? And people who buy shares with voting rights, they go for influence. The people I've spoken to are more the investors who go for the economic rights. So I compare them with myself. If I buy somewhere some shares, I never execute my voting rights, but I'm interested in the economic rights. If it doesn't work out, I sell again. What this farmer is explaining extremely well, it's a different type of investor. It's not the one after influence, but it's the one after economic upside. Does he believe in our strategy? Does he believe in our value creation? And does he believe that he gets an upside out of that? And if yes, then he keeps the unit. If no, he sells the unit.
Fran, what's your view?
Well, I think he did really hit the nail on the head. People understand in the investment markets that this units aren't going to come with voting rights. It's not going to come with significant influence. They understand that. So to some degree it's seen as a passive investment. But as I was saying earlier, it's also an exposure to our key industry, and we don't have that exposure. So units in that will be, I think, attractive to permanent investors like your funds, your KiwiSaver funds, obviously also the super fund and others, ACC, there'll be a raft.
But Damien, what about some of the overseas examples of dairy companies where they thought they were allowing some investors into their companies, they wouldn't have undue influence, and it's turned out to be anything such?
Well, that's exactly, and there are numerous examples of that. We have now a company owned by the supplying shareholders, and TAF puts some of their income into the hands of these investors. Now, that's their legal right to do that. The question is why and what we're trying to achieve here. And the documents that have been sent to farmers just recently say that the size of the fund is critical. Now, they don't say why it is critical, but the reality is that that size could get to the point where it does have influence over the company. And when things are tough, the question for the board will be who gets the right to the income? The farmers for their milk or the investors for their dividend streams? And that's where the farmers will start to see, while it might be a small amount in relative terms, it's still hundreds of millions of dollars potentially going into the hands of investors that would otherwise have come to the dairy industry.
Andrew, what's your view as a farmer? Do you have that concern that Damien's outlining?
Well, I think the key thing there is how the milk price is calculated. Everything I've seen so far shows that the dividend stream is the very last thing that is calculated, and it's all based on the GDT. We're able to clearly see what the prices we're receiving for our products overseas. Remove the costs, there's the milk price. You remove that from the Fonterra profits, take away the milk price, what you're left with, retentions come off that, and then there's the dividend. So how you can get into a position where outsiders can influence that, I'm not quite sure.
This is about protecting our capital base, and the fund of 500 million is about 8%. Let's take a year of this year, 11% growth. Let's say that next year we go back to 3% or even below if there's a serious drought. Then it's very likely that we get an inflow again of 8% of dry shares, and that's why we said, in order to have a fund, starting fund of 8%, and giving us breathing in and out, which could be in an extreme year like this year compared to next year, yeah, of 11% growth versus 3% growth or less. That's a breathing space of 8%. 8 plus 8 is 16. And that's sufficient for us to really guarantee that it's protecting capital and not raising capital. If the fund would be bigger, then you really start into raising capital.
This is not about raising capital, so we are told, but the questions of how Fonterra raises capital through the structure is a crucial one, and it's yet to be answered.
Coming up, what happens if the TAF vote fails? Where will that leave the giant dairy cooperative and the farmers who own it? Stay with us. Welcome back. We're having the final say on the crucial TAF vote for Fonterra farmers. My guests are Labour's agricultural spokesman Damien O'Connor, Federated Farmers Dairy Vice Chairman Andrew Hoggard, business commentator Fran O'Sullivan, and Fonterra Chief Executive Teo Spearings. Teo, if the vote fails, is there a plan B?
The answer is yes and no. Let me say why I say yes in the beginning. If the vote determines that it falls, then I think we come into a sequence of events, because many people have been working on this for quite a long time, and that's up to director level in management. So people will really also consider, hey, what has happened here, and how do I look at this long process of 3 years, and what does it really mean for me? Our destiny is not in our own hands at that moment, because we go from a fair value share of 452 immediately to 557. Yeah, so the redemption risk increases. Next step is for me to look at the balance sheet and say, okay, what does this mean for the balance sheet? What does this mean for retentions going forward, to have the gearing on a level that the company is safe, right? Next step is that I have to go to review the strategy again. I have to say, okay, if there's less money, we can possibly, out of the 100 projects we are having at the moment, maybe we can do 60 right now and phase another 40. That opens up in the international scene, in my opinion, space for competition and competitive reaction, because I was sitting in 2007 on the other side of the world looking at had a similar discussion on capital structure, and my reaction immediately was, when it fell, where does Fonterra have strong positions and where could we potentially take ground? So you will face a competitive reaction. So yes, there is a plan B. We have to come up with another solution. That will take another 2 years, minimum. So that means 5 years standing still with the biggest company and co-op of New Zealand, and with competition coming in left, right and centre in the world. So for me, basically that's the no.
In my view, the solution is wrapped up in TAF, and that is that there should be a 3-year share up, which is included, and a 3-year payout, and that would reduce the redemption risk considerably on Fonterra now under the current structure. And one of the views I have is that that should have been considered, and I would like to have seen discussion on that.
Fran, if there is a no vote, how will that be perceived as regards the New Zealand economy as a whole? Could that mean loss of investor confidence?
Well, I think what it would mean is loss of confidence in Fonterra, and a question mark over why our largest company and cooperative has been through 2 sets of capital restructure plans and failed to nail it. And I think that raises questions also in international markets, particularly. What can Fonterra bring to the table? It has the big ambitions which Teo has put in front of the market over the last few months, including through China, India, Southeast Asia. That's going to take considerable capital, but if Fonterra is in the position where the back door is not sorted, hasn't got permanent capital under control, it means it's a very weak partner going into JV. So I think it slows the whole game down big time.
The only people here that Fonterra really needs to gain the confidence of are the farmer supply shareholders. And in fact, the capital being raised will be through their retained earnings. And as long as Fonterra has their confidence, then the company does not have a big problem ahead of itself. Well, and in fact, we have done very well out in the international marketplace with the global financial crisis.
We've done well because of the melamine crisis in China.
No, we haven't. We were involved with that. That
yes,
was a potential threat.
It was a threat, but
and it was dealt with concisely
by
and
your
very
government.
well.
And what actually ended up happening, though,
by a cooperative company.
It meant that there was a value attached to New Zealand product.
Correct.
Now, if that hadn't happened, what would the situation have been with Fonterra and New Zealand dairy over the last 3 years?
And that's why we need to have the supply from New Zealand farmers into Fonterra.
But we also need to have developed
retain
supply.
That,
we need to have intensive UHT, we need to have infant branded formula, all sorts of things.
And that's Teo's job.
But he needs capital.
We have gained some momentum.
This is not about capital.
He can raise capital when he's tied up the back door.
Andrew, I want to ask you, what say the vote goes against TAF? Will federated farmers be calling for heads to roll in Fonterra?
I don't think we will be. That's not really our job. That's a case for Fonterra shareholders to decide on. But I mean, if the vote goes against is a no vote, then I think the first thing that's got to happen is farmers need to have a good look in the mirror, because we've consistently, over the last few years, elected pretty much the same directors. We've elected the shareholder councillors. I mean, the board is 100% unanimous in support of TAF. The shareholders council is around 93%. So at some point, we're not if we vote no collectively as farmers, our votes aren't matching up with what we've been doing. So we perhaps need to have a serious, long, hard think about what it is we want from our cooperative, where we want it to go, and put a bit more thought into it, I guess.
Now, Damien, with the parliamentary process of getting the legislation through the House, in your view, has this been flawed from the start, that the legislation has more or less run alongside this final vote of Fonterra shareholders? The
normal process would be to get a mandate from the industry and then Parliament to implement what the industry wants. This has been back to front, I have to say, and so we've been trying to second guess what is in the best interest of the farmers. And I'm not sure we've got it right. In fact, Clause 77A, where fair value, fair market value, the intention of most of the committee members was to ensure a cooperative share value. The officials was to ensure a full value. And I'm not sure what the objective of Fonterra and the board is, because if it is to ensure a fully discoverable full value share price for Fonterra, then there's some real risk to the cooperative moving forward. This is a cooperative based on a nominal value share, and the people who want to see the full value for a share in Fonterra are the people who want to see it undermined and demutualised, and that's not what I support.
Let's go to a final farmer question now.
I'm all for Taft, but if it doesn't go through with a strong vote, are we going to stay with status quo, or are we going to try for some other option?
Teo, how strong does the mandate need to be for Taft, do you believe?
And you're asking for a percentage. We are going for the constitution, but we want to have a united co-op, and we don't want to have a split in the co-op. So you really look at a number. If it starts with a 5, it's not a mandate.
Coming up after the break, we talk redemption risk. Stay tuned. Welcome back. I'm Glenys Christian. We're talking about TAF, the pros and cons, with special guests, Fonterra Chief Executive Teo Spearings, business commentator Fran O'Sullivan, agricultural spokesman from the Labour Party Damien O'Connor, and Federated Farmers Andrew Hoggard. Teo, redemption risk. Can TAF really solve this issue?
Yeah, this whole TAF construct is built to solve the redemption risk of, and we know that from the formation, again, we are in a privileged position. DERO is there, fair value share, free exit and entry, and this definitely takes care of redemption risk in the co-op.
Teo, the due diligence summary that you've sent to the farmers clearly states that the redemption risk will be reduced but not eliminated. It will be shifted from 500 to 800 million, which is the current estimate, down to 120 to 200 million. So the company will still be obliged to have access to that amount of capital. And the rest of it, dare I say, has been shifted onto the books of the farmers. So it doesn't actually eliminate redemption risk, it just shifts it, and some of it still remains with Fonterra.
I say this is a construct which really covers the redemption risk for Fonterra at this moment, at a stable situation. When you go to extreme situations like unwinding the fund, where the farmers have asked us to come with a construct.
Stated that as one of the considerations, and some say the 500 to 800 million is at the extreme of a drought, global financial crisis and very strong competitors. I think now Fonterra's probably got more support from dairy farmers than it's had through its 10 years of existence.
But Damien, we know from history as well that the reasons for farmers to really say I'm leaving, that does not really have to do something with performance, but farmers really leave for the commercial gain. So for that share price, and they want to use the capital somewhere else. And for me, that's kind of the loyal farmer staying with the co-op, staying in the co-op, believing in the strategy, believing in the value proposition. They have to carry that risk for the disloyal farmers who want to leave. And that is solved with this construct.
And those farmers leaving should be paid out over 3 years, not over 30 days as is currently the case.
I look at it sort of on my own farm basis. You know, we're in a family company. If every year my old man sort of threatened that I'm going this year, I'm off to Mount Maunganui, buy me a beach house, I wouldn't have gone ahead. You know, we've made some big improvements on the farm in the last 3 years. We've taken some big risks in a pretty tough financial time. And it's really driven farm efficiency, production, and improved the farm profitability. And if I had had that risk hanging over my head that I may have to pay my parents out in a year, I wouldn't have gone ahead with that, and I'd be behind where I am. So when I look at, you know, people say, is redemption risk real? That's the sort of scenario I think about for myself.
Fran, looking at possible investors coming into the fund if TAF does get the go-ahead, is there any risk there that they will blow hot and cold?
Well, it depends whether they're long-term investors, and I would have thought when the fund is marketed, it would have been in the interests of achieving liquidity and all the things that you would want from a well-supported fund, that you had a good range of those with the long-term views, like your super funds, people like that, iwi and others who can take a long view and not necessarily be subject, I guess, to vagaries of, for instance, like what might happen in the share market. So, yeah, I think if it's well marketed, it's not a huge fund. It starts fairly small, really.
Top 50.
Yeah, it's not a big fund. Yeah.
Tell me, with the tightening of TAF proposals, which have recently come out. Is there any danger that will scare some investors off?
If you take a long view, I don't think the risk is huge. Sure, things will go through hiccups, and that'll be no different to what you would expect with an agricultural economy. But I think they will have to sell it well. It will come down to Fonterra being transparent, you know, in what it does. But that's something it's got to manage from all sides.
Andrew, looking at the possible investors in TAF, in the fund if TAF goes ahead, how concerned are you about their interests not being aligned with those of farmers like yourself?
The interests of the two groups are probably going to be divergent. My interest is ensuring that I've got a very highly perishable product, 21,000 litre vat that needs to be emptied every day or every second day. I need to be certain that that's going to happen. It puts me in a very risky position if I wasn't in a cooperative. So that's my number one priority. And then the number two priority, of course, is getting a fair return from the marketplace from that milk. In terms of an outside investor, their focus is going to be on returns, be it cash return via dividend or share growth. So those two sort of interests are different, but I don't believe they have to be mutually exclusive. There's going to be tension, and that's where I believe it's imperative that we have that milk price formula right, that milk price manual is clear, it's transparent, and I think, you know, if farmers are going to do one thing before this vote is make sure they understand that milk price, because to me that's the entire key. If we're certain that milk price manual is correct, it's solid, it's transparent, it's set in concrete, it gives guys faith.
I agree, it is essential, but all analysts say it is somewhat subjective. At the moment, if the milk price setting process is not exact, then it doesn't matter, because the farmers get either through the dividend or through the milk price the same returns. When those two interests are divergent, it is absolutely essential that we get it right, and it is still a subjective process as laid out. There are some investors and some competitors of Fonterra who maintain that the current milk price is too high. If they get their way, there will be less for milk and more for dividends. That is a concern that I have, because it will drive up share price as well as the dividend returns, and that is a big risk for Fonterra.
Just quickly, Fran, TAF, should farmers vote yes or no?
I think farmers should vote yes, and really it's something that's gone on for a very long time. They've had the advocacy from the top down and fairly unified, with the figures which Andrew gave within the council and directorship. If it doesn't go ahead, it's a vote of no confidence in the governance of the industry. I mean, it's been on the table a very long time. I think they need to do it, and then I think they need to get on to make the company, you know, much better and bigger than it currently is.
Right. Damien.
I'm concerned that TAF is an evolution of a 2007 proposal that was to put some of the shares of Fonterra on the market. There have been a lot of changes since then, but I'm concerned that a mere 50% vote on June the 25th is not the proper mandate to push ahead with the capital restructure of what is New Zealand's most successful company in our biggest industry. And we've done very well since the 1930s to ensure that all the returns from the marketplace come back to the farmers. This TAF vote will mean, if it goes ahead, that some of that money will not necessarily go back to the farmers. That's a concern, and it may change the way that Fonterra operates in the future.
Andrew.
For me, it's three key things. Again, back to that milk price. Is it secure? Can you see any potential pathway for someone influencing it? Outside investors may want to change the milk price. The question is, can they?
Teo, the final say.
Fonterra has done in the next phase, in the first 10 years, great by doing independent milk price, that's milk, market and value proposition strategy, and now we're looking at money. Money should not flow in and out, and a solid base for us to go forward to really implement this value proposition. So the next 10 years is for me about performance based on that solid base, and we have to make sure that we generate enough cash in our business to do growth and new things. Most important for me is, and that was the question from the farmer, 25th of June is for us unite the co-op, because if there's a split in the co-op, this whole 20 years of work from formation, foundation, future is lost.
There you have it. Thanks to my guests, Fonterra Chief Executive Teo Spearings, business commentator Fran O'Sullivan, Labour's agricultural spokesman Damien O'Connor, and Federated Farmers Andrew Hoggard. I'm Glenys Christian.
Hi, I'm Teo Spearings, CEO of Fonterra, and you're watching Country 99 TV.